Will the AI bubble end in tears? I'm not saying this. Famed economist Mohamed El-Erian is, and he in fact gave this warning. Well, if you see, booms and busts are part of economics, but the current rage in AI-related stocks has gotten investors nervous. And look at the statistics. Since early 2023, Nvidia has climbed 13 times. Alphabet and Microsoft have almost doubled. But on the other hand, in stark contrast, S&P 500 has just multiplied by 1.8 times. Therefore, this difference is huge. And therefore, a bubble is almost certainly here. But the big question is, how will it end? Let me take you through 3 possible endings of this AI bubble: the good, the bad, and the ugly. Let's start with a good case. Like the dot-com era funded Google, this cash influx could finance productivity-enhancing technology that could benefit humanity as well as eventually yield returns. Therefore, in short, the bubble could serve as a necessary funding for startups. Let's talk about the bad. A realization that companies are overvalued could potentially cause a recession or a correction. Hopefully short-lived, like the one seen in the 2001 dot-com crash. But since more households are invested in the stock market now, the pain could sting deeper. And think about the ugly. While AI stocks aren't houses, the sheer debt being taken by these companies to build future data centers is alarming. And think, if these companies were to by any chance default or fail, the potential systemic impact on the financial system is not just unknown, but could also be catastrophic. Let's take a look at some notes made by seasoned investor Pankaj Murarka on the recent IPO boom. Well, if you see, there's been a massive surge of companies coming up with their IPOs that have either been consistently profitable or loss-making, but with price that has very little connection to their reality. And Pankaj Murarka says that this is a classic case of valuation running far beyond their actual reality. And the market did what it always does: corrected the excesses. Stocks that were initially mispriced often came down dramatically to the levels that actually reflect the true growth potential of the company. And as Murarka highlighted, the lesson learned here is that fundamentals always catch up to their narratives. In fact, high expectations are not alone enough to sustain the price. Let's go back to the AI bubble. Pankaj Murarka is reportedly super bullish on the Indian IT space, viewing AI as a long-term tailwind for the sector. Because unlike past technological advancements, AI is not just a hype, it's a fundamental shift that could potentially drive growth across all sectors. But Murarka also highlights a risk, and the risk is that valuation of certain stocks could be connected to how much they directly benefit from AI. So while AI seems like a genuine growth story and a secular growth story, the market's enthusiasm could lead to overvaluation. Therefore, the focus should be on visible earnings growth and a credible plan to monetize this AI opportunity. So the question for every investor is, would you give in to the AI hype, or do you think this AI bubble could burst anytime soon?